We've got Dr. Rangarajan, the chairman of the Prime Minister's Economic Advisory Council, joining us on the phone line. Dr. Rangarajan, firstly, the CRR cut that we've seen of a half percentage point, do you believe that this in some manner runs contrary to the RBI's stance of being anti-inflationary stance? Do you believe this sends out a wrong message, even if it does address the liquidity challenge in the near term?
I don't think so, because some years ago, when the interest rates were still administered, CRR was certainly an instrument of monetary policy, and it was used as an instrument to convey messages. Now we have both the policy rate and the CRR, and the CRR can be used sometimes primarily from the point of view of injecting liquidity. Certainly, the cut in the CRR has been motivated by two reasons. One, the headline inflation has come down, and therefore some signal was required on the part of the central bank to be sent out. The second was the fact that the liquidity conditions have been tight, and some permanent measure of improving the liquidity was required, and therefore the CRR was reduced. Therefore, I don't think that the two are in conflict. I think the policy statement has been very explicit on that, and the governor has gone on to explain his own concerns about the future trajectory of inflation, and we should expect the policy rates to be changed only when there are definite signs of decline in the non-food manufacturing inflation.
Sure, but Dr. Rangarajan, while voices in the government continue to maintain that we will end the current financial year at a GDP growth of 7.5%, you've had the RBI come out today, revise its growth forecast downwards from 7.6% to 7%. Would you say that the government at some level is being a little too optimistic about growth in the fourth quarter at least of the current financial year?
No, I think the assessment of the Reserve Bank regarding the growth prospects for the current year appear to be in the right direction. I would also put the growth rate for the current fiscal year only at around 7%. It may be 1 or 2 percentage points above 7%, but it will be only around 7%. And therefore, we have been revising somewhat downwards in the light of the developments at home and abroad. And therefore, the projection made by the Reserve Bank in its policy statement regarding growth appears to be the most valid one.
But also, Mr. Rangarajan, the RBI has made a very strong point about, and it's actually come out fairly strongly against the government, saying that diesel needs to be deregulated completely if in the next financial year the government's going to bear the burden of a large food subsidy bill. Now, given the challenges that the government faces, do you believe that if this year was bad on the fiscal deficit front, the next financial year can potentially be worse, considering that the subsidy bill of the government is going to mount?
Well, action is required in a substantial way on the total amount of subsidies provided for in the budget. If the subsidies under the food security provision will go up, there has to be a substantial reduction in the subsidies under the heads of petroleum and fertilizer. I think actions cannot be postponed, and appropriate policy initiatives will have to be made during the next fiscal to achieve a substantial reduction in petroleum subsidies.